So it's early morning, and it looks like both gold and silver might be recovering slightly from the metal slaughter that took place yesterday. So at the time of this recording here, we have what looks like a little bit of upward momentum, but then again, nothing to get excited about. But what is most notable, the fact that yesterday when gold took a dip, Bitcoin took a surge. So clearly that highlights a deliberate attack by the bullion banks on one side, perhaps Wall Street on the other. And based upon that type of activity, one thing I anticipate seeing more of are an increasing frequency in gold dips to try to distract people from getting physical. Since they can't actually stop people from getting physical, it's going to result in the Federal Reserve price of gold and silver surging to highs that they couldn't have imagined. And could we possibly be seeing several hundred or even $1,000 gold surges similar to Bitcoin? That is worth talking about. All right, so I want to take a minute to share my 2 cents in reference to what happened yesterday with the gold and silver slam down, and all of a sudden the Bitcoin surge that caught a lot of people by surprise. And so once again, there's two different narratives, two different driving forces. To be straight and blunt with you, we got gold and silver being sought after globally as a diversification hedge out of the dollar. And then, of course, when it comes to digital assets, we now have the Federal Reserve talking about how to integrate payments into the system. Clearly, that's a Western-driven narrative about how to steer people towards the digits. And so these alternative realities that's being positioned in front of us are going to be competing for your attention a lot more in the days ahead. But one thing is different. While everything is denominated in Federal Reserve notes, not everything will be treated equally because the West wants you to go digital, where from the global standpoint, nation states as well as central banks are racing to get physical. And so that's something I want to touch on in this video here. And as always, if you guys want to see more of these little quick takes, definitely hit that thumbs up to show your support for the channel. And if you have any thoughts or comments worth sharing, then definitely drop them down in the comment section and make sure you subscribe. But more importantly, take this and share it so more people can get an alternative perspective as to what's really happening around here. But first, let's jump into the silver and gold price this morning. So here we are now early morning, and it looks like we got a little bit of upward trajectory of silver and gold price, but nothing to really brag about just because $40,000 gold, $48 silver is lower than the all-time highs. But then again, it's just a temporary pause in what I would believe will be a extremely jaw-dropping surge in the days ahead. And so the main thing I want to actually talk about is this particular chart here. And so I caught this after I got done with the stream yesterday. And so to see Bitcoin surge at the same time gold was dropped deliberately spells collusion between institutions in Wall Street and the bullion banks on the bottom. So clearly they know what they're doing. But one thing out of all this that really excites me is the fact that we've seen over the last several months the extreme volatility when it comes to the crypto space. And of course, there's a variety of reasons as to why that is. But ultimately, when you have hundreds or $1,000 days in coin in particular, to see 300-400 decline in gold is very small compared to what will come, because there's a race to get into physical things in reference to gold and silver, while the West is trying to drive the narrative that everyone is clamoring to try to get into the digital space when it comes to Bitcoin and the like, because of tokenization, alternative assets, and all types of things that the West is primarily driving. And so just in looking at charts, you get a chance to see a different narrative that I believe will get it in sync one day. And when it does, we're going to see prices rip in gold and silver that we could have only dreamed of until it actually happens. And I want to compare that to actual Bitcoin activity right now. So as I scroll over here and just highlight the last month in gold in particular. And so this is literally the 1 month chart. And so as we see here, what stands out most is the fact that there's been a substantial increase within this last month for a variety of reasons, of course. And so the dip above my head now might seem to be a lot initially, but it's small when you zoom out and look at things from a bigger picture. And then particularly when you look ahead as to what will come because of the global demand and the scarce nature of actually being able to get physical at the current price. Nevertheless, the incremental climb of the price as more and more people will be unwilling to let go of gold and in particular silver. So as of right now, just to scan through this chart here, so this is the actual incremental climb. So literally September 23rd, 37.40 for gold. September 29th, 38. Then we jump to October 6th, 39.50. Then we go to October 8th, 4,000. And then it came down some. So October 9th, it was 39.60. And then to go all the way up to the top, which was a single week's movement, we got up to about 4,300 or so. And then, of course, here we are now, a 24-hour drawdown back to 4,000. And so just looking at that, you see within a single month time frame, almost $1,000 surge, which, of course, we've never seen that up until now. Now, we to take that same type of movement and compare it to Bitcoin. Bitcoin has surged higher in shorter increments and somewhat faster. But then again, the volatility has been that much more extreme to where you have thousands of dollar surges with bigger 5-digit dips. And so wait until gold has that same type of reaction. Imagine what type of world we're going to be living in at that point. And so what am I talking about? So let's just take it to the Bitcoin chart here and look at literally the last month. And so if we were to start at the beginning of the month on September 22nd, we're looking at $112,000 day. Then you go to September 28th, it's 109,000. So that's about a 3,000 or so decline. And then from September 28th, incrementally all the way up to the top here of an all-time high on October 6th at $125,000. And of course, since then, it's come down substantially for a variety of reasons. But to go from 125 on October 6th to just 5 days later, back down to 110,000, that's a $15,000 swing. And of course, the low out of this swing was October 17th at $105,000. And of course, the crypto community was going crazy when they saw that. The reason I point that out is just simple fact that everything taking place in Bitcoin and the digital asset space is a Western-driven phenomenon. So I'm talking about the United States of America, all the institutions on Wall Street, as well as in Europe. Those are the leading nations right now that appear to be clamoring into this Bitcoin narrative that is being set forth because of this transition back into the digital space. So on the flip side of that, you have gold and silver, of course, which is being heavily sought after by nations that we know of, such as China, India, and even a lot of European nations. And so while both gold and silver, including Bitcoin and all the other assets, will go up because once again, they're denominated in this instrument here. And over time, this right here buys less. So clearly, the asking price for those assets have to go up. But what people are not really considering is the extreme upside that we're going to be seeing in gold and silver. That's going to be driven by a lot of factors beyond what we're talking about or hearing from the mainstream media. And so basically what I'm saying is get ready for days where you see a $400 or $500 dip, but then a $1,000 to $5,000 surge the next. And then when it comes to silver, if I was to put up a silver chart, you'll see the same type of activity. You'll see a $4 or $5 decline, but a $10, $20, $50 surge. And then that'll put us at prices that, once again, we've never seen before. But the reason I think this is important because while the West is trying to build up the narrative for the digital asset space, the global scene is telling us what's preferred on a global stage as well as where everyone, including nation states, are actually heading. And so while we get headlines to say stuff like this, the Federal Reserve enters a new era in payments. Waller welcomes crypto to the table. Everyone here is not surprised by this one bit. Because the West is driving the narrative towards the digital space, it was just a matter of time before this narrative came out. Here we are now, a central banker talking about how to incrementally implement digital assets into the payment system by the Federal Reserve. And of course, for those who may not be familiar with it, I'll give you a little bit of what's going on here. So it says, Federal Reserve Governor Christopher Waller says that central banks is entering a new era in payments, one that openly embraces decentralized finance and distributed ledgers and digital asset innovation as part of the mainstream financial system. Speaking Tuesday at the Fed's first ever Payments Innovation Conference in Washington, Waller said the central bank intends to play an active role in the crypto revolution, transforming the global payments landscape. And so I'll stop right there just because of itself, a central banker excited about incorporating cryptos into the payment system. What a surprise. But while gold and silver, of course, is making all-time new highs, the Federal Reserve not touching that. This administration's not touching that. But all the legislation, all the crypto euphoria on regulatory clarity and everything else is being pushed. But then on a global scale, what's not really been talked about is the fact that foreign central banks are making some tough choices. Or not necessarily that tough anymore, but it used to be tough. What am I referring to? You have the dumping of U.S. liabilities, aka treasuries, for something true, tried, and tested. And at the same pace, nation states are getting out of liabilities and getting into gold. We have in the Western Hemisphere, Federal Reserve now, as well as its current administration, continue to promote and to pump the narrative of the transition into digital stuff. So this here comes from Visual Capitalist, but just to give you an idea as to what's going on here. In gold, which is gold, in green, U.S. Treasuries. To go back to the 1970, of course, when the gold window was closed, all the way up to the early 90s, gold was in the picture as treasuries became the global international standard of reserves. And of course, after all the recessions and economic interventions by the West, we've had a transition where nation states, being led by the IMF and all the other international banking cartels, decided to dump gold in exchange for a completely debt-based society by U.S. treasuries. And so all this green here was a percentage of which other nations decided to keep in their national savings U.S. liabilities. And of course, it's all changed bit by bit. But going back to the quantitative easing era, right into 2020, there's been a continual surge of dumping liabilities in exchange for zero counterparty assets such as gold. And so right here, with what I call the great flippening, we've had 24% increase in gold holdings with a continual downtrend to the tune of 23% of nations that want to hold U.S. liabilities. And so that alone will lead to more nation states deciding to ease off of liabilities and exchange that for something real and tangible that they can actually put in their vaults with no counterparty risk or reliance upon a nation state that's going rogue by flooding the world with liquidity. when the time is right. And so it's charts like that to let me know that we're going to see gold swings and silver swings as the West continues to try to suppress the price with all the paper and futures manipulation that they do best. But then again, that can only work for so long. And I believe that the activity that took place yesterday, where we saw what appeared to be a falling off the cliff of gold and silver, which ended up being a couple $100 for gold, and as of today, about $6 for silver. When it's time to surge back up, we ain't seen nothing yet. I'm talking about $1,000, $5,000 gold swings upward, and of course, $20, $50, maybe even $100 swing in silver upward. So once again, just taking a minute, sharing my 2 cents on where I think we're going to see prices in the very near future. But then again, on the crypto side, you better believe while nation states are driving gold and silver prices to all-time highs, the Federal Reserve, with this announcement on them implementing cryptos into the financial system, we're going to also see Bitcoin surges 10, 20, 30,000 as well. So once again, everything denominated in this currency here will eventually go up just because they're going to create a lot more of these and flood the world with them. Therefore, having a strategy and a plan is going to be key for everybody. But as always, if you enjoyed this, hit that thumbs up. And as always, I want to share all this information without providing some alternatives as well. So if you're interested, I encourage you, scroll beneath this video here, a variety of options for people who want to protect and preserve everything they work hard for. And other than that, I'll catch you guys later.